Let's have a look at gold. First off, read this disclaimer carefully. So in this video, we will look at gold. Gold is very interesting. It's been on a huge move, and I do think it's getting ahead of itself. So obviously, the bulls are in control. There's reasons to be bullish about gold, but if you look at the history of gold, right? If you go far back, we've had many rallies like here and here and here and so on and so forth. But gold has a tendency to behave like a mature security, so it will go on rallies, but will also have a pullback. This isn't like a penny stock or anything like that. Gold is a different beast altogether, and it's the mother of finance as well. So we certainly expect gold to continue to be like that, and most likely have a bit of a break before moving higher. If you look at RSI, so these are weekly RSIs, and we are looking at the futures now, but that is simply to get more data. But you also, of course, have the GLD ETF. So here is the ETF GLD. Okay. So when we look at MACD, we have one of the highest MACDs we have had going back here to the beginning of this millennium. If you look at RSI on the weeklies, we are very extreme at the moment. We were higher in 2019, also here in way back in 2011, so it's possible, but we are very high. The same thing with the PPOs. So definitively risk is big here. Looking at the daily data points. So obviously bulls are in control. There's no doubt about that, but as an investor, you always ask, okay, what will most likely happen next? Because that's the thing, right? You don't, if you don't have a position in gold, you benefit nothing from what has happened. So then the question is, okay, if you are going to click buy or sell on your trading platform, where is the most likely place to have success? Here are the dailies, very extreme MACD. We did see something similar here in 2020. Then we got a pullback. Same thing with RSI. The PPOs are very high, but not super extreme, but definitively elevated. So we could make a very strong case that gold, it certainly is overbought. So I do think I will give the bears a -8 on this one of a max 9. This is just ridiculously overbought. So let's go to the seasonality. So looking at the left here, in green we have the average over the last 5 years, the last 7 years in blue, and the last 10 years in red. So we could have a bit more rally into later-ish of April, but then we do expect a pullback. Looking at the table view for April, so far almost 5%, which is one of the better Aprils historically. May, as you can see, has recently been a bit bullish, but June is bearish. So the seasonality here, yeah. So given that we recently have seen a strong start for April, one could argue that the bullishness of April sort of has been used up. May wasn't too shabby. June is bearish. I do think I could give the bulls. Let me give the bulls a 2 here on the seasonality, but they kind of have used up a lot already. When it comes to the fundamentals, fundamental analysis of gold is just really messy. So I think actually I will skip over fundamentals here. So let's go here to relative performance. So let's look at gold here, and I will compare it against GLD, which is one way to get exposure to gold, and also against the GDX, which is the gold miners, like that. So looking long term, weekly data points, yeah, we do have a 63% positive correlation between gold and the S&P 500. Some might find that a bit surprising, given that gold is thought of as like a fair trade. But then again, it could be that the recent rise in gold, along with S&P continuing to be surprisingly strong, it could be that it's a hedge, right? So you have people who still have positions on the SPY, but they definitively want to increase their exposure to gold as a hedge. But generally speaking, yes, gold is considered a bit of a fair trade, while buying the SPY is definitively not a fair trade. Correlation with gold, ETF, GLD is perfect. That is really good. GDX, 28%, so very weak, frankly. Short term with daily data points, 81% positive with S&P 500, perfect with the GLD, 66% with the GDX. Let me actually also look here at, so it's basically we have a perfect correlation with the GLD, that's good. Let's look at silver. So short term, 82% with silver, and long term, 48%. Okay. So what happens to silver? It has an effect on gold, but they do move a bit very differently. So yeah, let's actually look at the futures. Silver futures. Yeah, so silver it's trying to break out. So you have a massive range here, a multi-year range. So and here you can also see an inverse head and shoulders pattern, which is, of course, it's bullish, but we are trying to break out after a big rally. So let's look a bit at RSI. Yeah, we do have fuel, like we don't have extreme RSI yet. On the dailies, definitively high though. But yeah, it's possible for the silver bulls to sort of make the big move. The issue here is the wicks, right? The wicks here are a bit high, so for silver to actually fully break out, right, it has to go up, almost 8%. That's a lot. So tactically, it would be beneficial for silver to maybe have a bit of a break, a cool down, then make the move. Yeah. Yeah, let's look at the seasonality for silver. Expecting some pullback here into early May. April, this is one of the best Aprils ever. So there again, you could argue that maybe the bullishness has been used up. Okay. So let's compare silver and gold. That. SI. Okay. So yeah, it's towards sort of like there's an RSI support zone here, which could mean that gold might enter a period of outperforming silver. On the dailies, yeah, it's a bit of a similar territory. You do see that there are time cycles between these two. So that's possible. So gold is expected to underperform into later April and then start to outperform a bit. So far in April, gold has underperformed. Silver, May is usually pretty mixed, but June is actually very favorable to gold in this pair, by the way, but that is in this pair. So going back here to my notes, relative performance. Yeah. So the thing is that silver is also sort of stretched and might be due a bit of a pullback. Yeah. So yeah, I think that overall relative performance here, let me give just one here in favor of the bulls. So we do end up with minus 1.7 in favor of the bears. We are ridiculously overbought, no doubt about it. We have seen a huge move. So minus 8 here for the bears. So that is the biggest number here. By the way, if you go to my website, I have now made this e-store thing where you can gain access to the Excel watch list. I will also add a bunch of other stuffs here, like AIs and stuff like that. I'm working on an option finder AI. It's working pretty well, and I do think I will release it soon. I'm also developing a trading coach AI. The key thing about that AI is that it will base its advice on a list that I give it of investors that have like very high long-term success. So yeah, because that is the key thing. So it will use all of the knowledge it knows because it's based on GPT to basically be like a trading coach. The key thing is to always like get the input from those who have been really really successful. I have talked to that GPT. The interesting thing, which is something that I knew from before, but it keeps like reappearing, is that what differentiates the successful investor from the others, it's not only analysis. Like analysis is good, but that's not actually the number one winning variable. What we do see though is that they are really good at managing positions. So managing your position is frankly way more important. So if you take this gold trade, right? So there's reason here to put on a bearish position. The evidence is just too strong looking into the future. Looking at the current, you would say that all the bulls are in control, but if you put on a new position here, I feel way more comfortable being bearish. So that could be going short or to put on a bearish option trade. Or you could also buy those leveraged ETFs that give you negative exposure to gold. But here comes the key, right? So the analysis here is just, okay, this is an interesting trade, reason to be bearish. The position management part is that, okay, it is fully possible that we could see a further spike in gold. That would obviously be a problem for a bearish trade. And what the most successful investors do is that they do have fairly aggressive stop loss. And so either they have very aggressive stop loss or they will position size accordingly. So in order to accept a wider stop loss, so let's say that you have a 20% stop loss on gold, on a bearish gold trade, that is very wide, but it isn't wide if the position is small. So if you put on like a $100 trade with 20% stop loss versus a $1,000 trade with like a 1% stop loss, right? So even though, yes, you have 20% stop loss on one, which seems extreme, but if the position is smaller and if you use options that are more capital efficient, then it will make sense. So when it comes to risk management, it's not simply about the percentage, it's also is about the risk to the overall account, where that is something they are really good at. But yeah, stay tuned for those. They will be really, really, really cool. And they will be based on GPT. So they will use GPT-4. So yes, stay tuned for more and go to the website to get access to all the things that are coming.